give a quick intro here. So we have today with us, super excited. This is the 2024 Economic Outlook event. If we haven't met yet, my name is Bronson Hill. Our company's called Bronson Equity. We've raised about $40 million private equity for real estate deals, multifamily development deals, other types of things, as well as ATM machines, car washes, all kinds of different stuff. So if we haven't connected yet, it's great to meet you. And we put together panels like this once a month. We also have a podcast called The Mailbox Money Show, where we interview experts like these and bring them in and talk about how to get involved with passive investing, where you can make more money without taking up more of your time. It's a little bit what we do. And as we jump in here, I'm just going to give a quick intro to each of our speakers. So we have Brien Lundin, who is the leader of the New Orleans Investment Conference. At one time, it was the largest investment conference in the country or maybe the world. He also works with the Jefferson Companies. Welcome, Brien. We've got Neal Bawa with Grow Capitus, and we've got Bridger Pennington with Fund Launch and Ugly Unicorn, which is a hedge fund. So I'm really excited to be here. Again, we got several different experts in different areas, and we're going to jump in. So let's just kind of we're going to jump in here in just a sec. If you do have questions, you can put them in the chat. I may see them, I may not. We would ask maybe you hold them until about 30, 40 minutes into the hour, then we'll start taking questions. We should wrap up for sure within the hour here. So we try to make this as power-packed as we can. And so I'm sure you're going to have some burning questions, and we're going to get to those, as many of us as we can. So let's just start. We're going to go just one at a time. Just economic outlook for 2024. We're seeing higher rates. It's impacted asset prices. It's impacted real estate. It's impacted economics. They say we're not in a recession, and they've changed the definition of what a recession is. So let's maybe start with Brien. What are you looking at for 2024? I know your background is precious metals, and you do a lot in economics as well. What are you seeing kind of where we are and where we're headed?
Yeah, thank you, Bronson. What we're going to get in 2024 is the long-awaited, long-anticipated, eagerly anticipated Fed pivot. We're going to hit the downside of this cycle. This has been the first, or actually the harshest Fed hiking cycle, arguably, ever. And it's put the markets in turmoil here and there, but the markets keep trying or have kept trying to price in a pivot. Now they know there's going to be a pivot. There are going to be rate cuts. And the markets are kind of arguing with the Fed over whether that's going to be 3 or 5 or 6 rate cuts. Really a kind of a minor issue, to be sure. But still, that's what's happening right now in the markets, is this kind of emotional roller coaster as the Fed acts like the lion tamer in the middle of the ring and tries to keep the markets at bay and try and keep them from getting too excited.
Before we continue, let me take 60 seconds to tell you about Multifamily University. Are you ready to take your real estate investing to the next level? Look no further than Multifamily University. Our comprehensive resources, including guest podcast appearances, educational webinars, the Real Estate Trends Toolkit, and the Location Magic course, are all designed to make smart investing easy and accessible. Plus, with no subscriptions, no upsells, you can trust that we're always looking out for your best interests. But don't take our word for it. Check out what our satisfied customer, Carlos M., had to say. Neal's presentation was filled with invaluable information that is not readily available to the average investor. This group takes you to the elite level of investing. Join the ranks of the elite with Multifamily University. Join us at multifamilyu.com and start investing from a place of knowledge today. Not only will you have access to a wealth of knowledge from industry experts, but you'll also be able to stay ahead of the game with our in-depth analysis of market trends and potential recessions or corrections. Invest with confidence and make informed decisions based on data, not gut feel. Don't miss out. Visit us at multifamilyu.com today, or click the link in the description below. And now, back to the content.
But eventually, whether that's going to be in March or later, we're going to see the first of the Fed rate cuts. And I'm kind of anticipating that they'd like to keep it at around 3, but conditions may force them to have more, 4 or 5 or so, because we're still going to have all of these debt resets at much higher rates than where they were originally. And most importantly, we're going to have a lot of Treasury debt reset at much higher rates. And that's going to be fiscally very dangerous. And we're already at about $1 trillion a year run rate in interest on the federal debt, and it's going up from there. So I think the Fed's hand is going to be forced at some point in the year to really accelerate those rate cuts.
Yeah, I think you're right. That's a really cool approach. I think one thing I've learned in the last 4 months, the federal debt has gone up by something like $3 trillion.
Yeah.
And so it's just amazing how the spending, doesn't come down either. And I know you're a metals guy. We're going to get into that in a little bit, kind of what the approach is from there as well. Neal, talk to us about what you're seeing. What are you seeing for 2024? What are some of the things you'd like to add there?
Well, I think what I'm seeing is just how fragmented the market is when making predictions about rate cuts. So Barclays, HSBC, Oxford Economics, they're still saying, hey, 2 to 3 rate cuts, so 50 to 75 basis points. And then at the other end, I see Wells Fargo and Jefferies saying the Fed will need to cut 200 basis points. That's 8 quarter point rate cuts. And then you've got everyone else in the middle, Deutsche Bank, Bank of America, they're either at 100 basis points or 125 basis points, where the vast majority of the analyst community is. So there's just a lot of variation. And I think that the way this year goes, a lot of it is going to be dependent on two things: how much the Fed cuts and how much they're forced to cut. Because last year, because we did not see the increase in unemployment that everyone was predicting, right? So my prediction at the beginning of the year is we'll finish the year with 4.5% unemployment. We finished with 3.7. So we started with 3.5, finished with 3.7. That's nothing, right? Unemployment remained the same. And so because unemployment didn't go up, we didn't see the sort of knock-on effects on the economy that we expected. I am still expecting that to happen. So once again, I'm going to say unemployment's going to go up, though it probably isn't going to go up as much because my base case is not a recession. It's recession-like conditions. So manufacturing's already turned negative. A number of other sectors are going to turn negative in the first quarter or second quarter. So we're going to start feeling like a recession. We're going to start feeling like slower growth. And when we do, that might force the Fed to cut, because what happens is when unemployment goes up, that's when you tend to get more higher rate of defaults, because you start seeing people not pay rent or people not pay for their homes, and that has a knock-on effect. Debt builds, and when debt builds, it puts a lot of stress on banks and banking conditions. And so you might see the Fed basically do an extra cut or extra 2 cuts to support the banking system and make sure that they don't have ridiculous amounts of debt that basically can't be paid back.
Yeah. Yeah, that's true. There seems like there's a variety of opinions, but it's going to have to see what will the Fed have to do in response to the economy. That's good. Bridger, what about you? Anything to add to that?
No, spot on from Brien and Neal. I'll add 2 things. If you can actually let me share my screen, I'll just share one thing. But while you're letting me do that,
you got it.
Something interesting this year is the election cycle. About half of the free world is having a general election this year. I think it's the first time in history. We have the US,
Wow.
obviously the general election, but you have the UK, you have India having a general election. Taiwan just finished their election as well. Typically, incumbents, people in power, like to stay in power. And a lot of times they will juice markets. They will do quantitative easing, whatever it is, loan forgiveness programs, whatever, give money to the people and they'll vote me back in office. So I see a lot of quantitative easing happening this year, especially towards the later end of this year. Something I'll just share real quick. This is from CME Group. They track traders and probabilities of Fed rate and hikes. If you look down here, this will kind of summarize a lot of cool data on the site, by the way. But they look at all the open contracts on the market and just see what people bet actually based on rate hikes and where rates will move. This is kind of the current bets right now. So the Fed meeting on 131, there's a 3% chance of an ease, a no change, 96% chance right now. On 320, 55% chance of ease. So kind of 50-50 of change or no change on that. And then by May and then into June, it's 100% chance of some type of ease. And then they'll kind of say the probability charts of where things may move here. So back on to Neal and Brien's points, just spot on. But I wanted to bring up the election as well. I think that's just very interesting this year specifically. You already have Biden looking at forgiving student loans. I mean, it's already starting right now. So we'll see how 2024 plays out with elections.
So that CME FedWatch, who puts that together? That's a really interesting data there.
Yeah, so I'll share again. I believe they're out of Chicago. They put this whole FedWatch tool together. A lot of fund managers in my group will use this and look at least all they do is just look at open contracts in the market and see where all these traders are at. So you can come in here, you can compare. They pull a bunch of data in here. It's fun to kind of see probabilities, historical, what they've done in the past, where they've pivoted. There's a ton of fun data on here, but I think that one I was just on is kind of the best summary right here of what the market at least is pricing in currently for rate hikes.
That's
Yeah,
great.
and
Go ahead.
Bronson, to kind of simplify it a little bit, I read Peter Bookvar this morning, and as of this morning, there was 100%. The Fed fund futures were predicting 100% chance of 5 rate cuts, down from 6, and there's about a 60% chance of 6 rate cuts in 2024. So it's still very high, and notably much in contrast with what the Fed is trying to say of more like 3. So that's the real tension that we're seeing in the markets and play out in the markets right now.
So we're gonna get into that. I want to. It's really cool on this panel because we have people coming from different perspectives and really in different assets. So based on that, the fact that rate cuts are coming, or that we think, there's a high probability that's happening, how does that affect the asset that you work with? Let's kind of go around. Let's start with Brien. Precious metals, I know they're always great, but how does that affect? How does that precious metals going forward, do you think?
Well, they're always great as insurance. As investments, I think they're going to be particularly great. And really everything, every asset class is going to benefit. The signature effect of this ever easier monetary policy over the last 40 some odd years since Paul Volcker has been that the markets are addicted to not just easy money, but ever easier money. And so particularly since the great financial crisis in 2008, we've seen that all of these supposedly uncorrelated asset classes have started to move in unison, and they're all like dogs begging at the Fed for treats and easier monetary policy. So instead of, that typical 60-40 portfolio that we all grew up with, bonds or stocks and bonds, all these correlations have trended toward 1 now. So passive investing, just heavy money in the markets. If the Fed has liquidity, provides liquidity, everything rises on a sea of liquidity and everything falls. So that said, all these asset classes are going to benefit from the Fed's pivot this year. There'll be some obviously volatility along the way as what we're seeing now, similar to what we're seeing now. The markets are begging for more and the Fed is being a bit more reluctant. But they should all move higher this year, particularly gold, because gold is a bet not just on easier money and the repercussions thereof, but it's a bet on the fragility of the entire system, which is, what we're seeing right now. We're seeing that whole system after 40 some odd years come to a head where, the Fed really has to keep rates at historically low levels, negative on a real basis, to keep all these markets afloat.
Yeah,
Can I ask a follow-up question to Brien? Sorry, I'm just jumping in, but I love this market. Brien, so GLD and SLV was manipulated by JP Morgan Chase. They were fined $980 million in, I think, 2019 for manipulating the precious metal markets for about a decade. And gold was kind of flat for that decade, fell a lot. Like the fundamentals are like, yes, gold should be 7,000 an ounce, but it's not. Like, do you feel like precious metal markets are being manipulated still? Because I look at it, I'm like, oh, like silver should be way higher than it is. Gold should be way higher. And I've been saying that for a decade. And we come to find out it was being manipulated for 9 or 10 years by, one of the largest institutions on earth. Any take on market manipulation in precious metals?
Yeah, the Justice Department actually deemed JP Morgan a criminal enterprise, which is really interesting that GLD and SLV.
Finally.
Largest bank in the world, right? Like,
but I mean, that's in court filings. It's deemed it a criminal enterprise, and yet
no one went to jail. They just fined
nobody.
them.
Well, actually,
slap on the wrist.
3 traders did go to jail, and
did
actually pretty harsh sentences, but they were low.
But no big shot, Bridger.
They were low-level traders. They actually did go to jail, which amazes me. But they went to jail for spoofing the markets and putting in bids that weren't real, and really just trying to manipulate the fix, the daily, the PM, AM, and PM, the London fix on the gold price. Not really the kind of manipulation that you're talking about. I'm a bit middle of the road. I don't think And I don't blame every daily price move on, some cabal out there just pressing their buttons and trying to keep the gold price suppressed. I do think they intervene at key points, and have intervened. That's a matter of fact. They've done it covertly, they've done it overtly in the past. So the burden on proof, in my mind, are on the part of people who want to prove that say that there is no manipulation. I think they do, but the futures markets are also structured for manipulation in really every asset class and every contract. There's a lot there, and if you have a good algorithm, you have a good internet connection and a lot of capital to put at play in a thin market, you can make a lot of money, and they do that. I don't think it's been dramatically manipulated over the past few years, because if you look at what's happened, in particular over the last couple of years, we've had again the harshest hiking regime we've ever seen. Yet gold prices, if you look at the big picture, have actually advanced considerably over that time frame, and remain elevated at a new trading range. So gold's done pretty well considering those headwinds. Now, what we're talking about now is that gold and equities and in passive income investments, real estate, they're all going to get a tremendous tailwind from the Fed's switch to a rate cutting cycle, which they have to do. The markets, the economy, the debt burdens that we have now, they just can't function under an interest rate environment like we have now. So we're going to have tailwinds ahead for really just about everything. But all of that's part and parcel of a system right now that's really fragile. And again, I think in the end game of a long-term trend that will demand some sort of a reset at some point.
I want to hear
I
Neal's
think,
side here in a minute. I just want to say this real quick about
yeah,
metals for those that aren't familiar. I had been investing for years, and I just didn't have metals as a part of my portfolio. And then I found this video called "The Hidden Secrets of Money" by Mike Maloney. It's a 10-part series, amazing, talking about the 5,000-year history of gold and silver being actual money, and fiat is not. It's currency, and there's a big difference. And so I've stored up a ton of it. You look at what central banks are doing; they're storing a ton of it. The more we print and print and print, the more having something real and tangible, I think, is incredibly attractive. So, Neal, what are your thoughts?
I think, I hold a significant amount of gold, and I like to hold physical gold. I actually don't buy the ETFs or things like that. Physical gold, physical silver. Um, and I can tell you that gold is really a patient man's or patient woman's game, because one thing is sure at this point: we have passed the point of no return where the global economy could be corrected without a reset. And I think that happened in
Mm-hmm.
and I think it had already happened before COVID, but COVID completely blew that 1 millionth chance that we had of correcting the economy out of the water. So at this point, the only question in my mind is, when does the next reset occur? Right? It could be 3 years out, it could be 10 years out. It occurs, and by the way, it doesn't occur because of anything that happens in the US. There is this completely nonsensical idea that the US is likely to be the one that triggers the reset. It's just a ridiculous idea. If you look at what happens when these kinds of bad things happen in the last 5,000 years, it happens at the periphery. The center is the last to fall. It's always the periphery. And today, the periphery could be either a developing country like Pakistan. I think that Pakistan is going to break up into 4 or 5 different countries over the next 3 or 4 years, because there's significant problems there. Or it could be happening in a major economy like Japan, which is pushing 300% debt to GDP. Japan's amazed us, and a lot of that is because their debt is held by their own citizens, not by foreigners. But still, there is a limit to how far Japan can go. China, their debt levels, if you actually count their shadow debt, were over 300% of GDP. The United States at 110% of GDP is in a much better place, especially because we're the reserve currency of the world. But one of these dominoes is going to fall in the coming years, and that starts to accelerate the process. So you'll know you've hit that point when all of a sudden gold goes up $500 in a month, or $1,000, because whatever that is the first canary in the gold mine, that the financial system is going through a reset. And we'll have trouble in real estate. But I can tell you, once we do the things that are necessary in a reset, like bail-ins, all kinds of crazy stuff is going to happen. that drives up the value of fixed assets like real estate. So we'll go through extreme pain followed by extreme profit because there's only so much real estate, there's only so much gold, there's only so much fixed assets in the world. So we're getting closer to that reset point. And COVID, I think, accelerated it by perhaps 5 to 10 years.
So if you weren't paying attention back in 2008 and you're just investing in real estate or in certain assets, I mean, you could have really gotten destroyed. And many people did. Many good friends of mine, many people got it. Many people probably that are listening or watching this on a replay. And so that's why I think economics, just paying attention to what's happening in the global world is so great. And so I love that, Neal. I love that you shared that. And I think all of us, it's interesting, all of us are gold and metals people and real assets people. And again, if you're going to Brien, if you're looking for the 60-40 portfolio, you're probably in the wrong room or the wrong video, but really it is very, very important to pay attention. Let's shift a little bit now. I want to talk, Neal, I want you to talk a little bit about real estate.
Can I ask a follow-up question to Neal real quick?
Please, yes.
How do you, sorry, and how do you think that reset happens? Is it through a central bank digital currencies? Like, do you think digital currency is big into that? Like, where do you think?
I'm not sure. I think,
what do you think?
Yeah, I think the reset occurs when the central banks of the world get together in Switzerland and basically start to do bail-ins, or they basically write down the debt or force write down the debt. We already saw this happen in Greece before. And nobody complained, by the way. The Greeks basically bailed in. Essentially, they made their depositors pay for the debt. And I thought, by the way, that when that would happen, there would be riots in Greece. And there was a riot of 15 people. One person died. The country simply accepted the fact that depositors' money was taken. I think something along that end has to happen. If you think about it, in 2008, the United States government bailed out all of the banks with a $700 billion loan called TARP. And where were the riots there should have been riots there. Why should we, the people of the country, spend $700 billion of our own money, unguaranteed, to bail out a bunch of big banks? Now, I would have done it if I was Treasury Secretary. I would have done it, right? But the point is, people, when it comes to the point where things are about to fall apart, almost anything that you can think of is okay.
Yeah. If you read, there's a bunch of books about this. One's called Dying of Money. There's some other ones that The Death of Money, and it just talks about what happened in the 1920s, 1930s. And it was a lot of stuff we're starting to see now. Like, we're starting to look at wealth taxes. We're starting to look at, price fixing and all this stuff that, it's just kind of everything's on the table. Once stuff starts happening, there's things on the table. Bridger, you had something else you wanted to add or say there?
Well, and maybe push back on me a little bit, Neal, but first off, TARPs got paid back with, I think, a 20% return. A lot of people don't realize,
but we didn't know it when we were doing it.
It was a great investment.
Here's the thing, Bridger. If the next TARP is $5 trillion, when we're putting it in, we don't know if any of it is ever going to get paid back. In hindsight, TARP was a great investment. At the time that people were making it, they were shaking in their boots. That the Treasury Secretary went down on his knee to Nancy Pelosi to beg her to give her $700 billion. This is an actual event. A Treasury Secretary on one knee.
So, and I'll just give a different perspective, but Michael Spence wrote a great book called Permacrisis. We've been hearing about this reset. Ray Dalio's talked about this, great resets going on. Everyone, it's like, oh, the world's going to end. And just a take or a thought is, the national debt's so big, all these problems with the world reserve currency, but compared to what? What are we going to go to? Like, you're going to go to yen? You're going to go to rubles? You're going to go to bitcoins? You're going to go to gold? Like, what are you going to go to? There's been a few people throughout history that have tried to get off the US dollar. Umar Gaddafi was killed kind of by the United States. Saddam Hussein started trading large amounts of oil without using the dollar. He was kind of killed. Vladimir Putin started trading large amounts of oil without using the US dollar. He had his pipeline blown up, Nord 2, from a submarine in 2 different places. Right? There's not very many countries that can blow up a pipeline in 2 different places. And so India was talking about trading oil not in the US dollar, and their
not doing it anymore.
Flash crash last year, if anybody saw that. Gold, me and my dad wrote a book called Dollars, Gold, and Bitcoin. My dad's portfolio manager of a $45 billion real estate fund. And in the book, he talks through all this. It doesn't make sense. And I agree with Neal. Like, the fundamentals, we are in a Ponzi scheme, and I was born into it. Like, we're part of the Ponzi scheme, but like, I believe the US dollar is a real reserve currency. That is our greatest export, greatest asset ever, is the United States. And they will do at all costs to protect that asset. And I know people hate the dollar, dollar's dying, whatever. The dollar is up 13% over the last 3 years. When you look at the DXY, because it's compared to what? Most people don't want to admit this truth. The dollar has done extremely well. Everyone loves to criticize the Fed. I know they sound like idiots, but they're actually playing an incredible game with Saudi Arabia. How Biden flew over last year, met with Saudi Arabia, got them on the oil deal. I mean, it's just this game, and we have 11 aircraft carriers that circle the globe to protect the U.S. dollar, the greatest export on earth. People talk about the 30 trillion in debt. My opinion is, if you are the world, we're not a business. We are the world reserve currency. If you start a new world reserve currency, you actually want 30 trillion in debt. Because guess what? The debt isn't owed back in Bitcoins. It's not owed back in gold. It's not owed back in yen. It's owed back in US dollars. And so to pay the debts back, you have to have US dollars. And we keep printing billions of dollars. Now, I know it's going to come to an end. I know it will. Like I know the fundamentals, the economics say it comes. We're in a Ponzi scheme. I get it, but I'm saying compared to what everybody else is way worse than us. What are you going to go to? And maybe the answer is they reinvent themselves into a digital currency, right? They restructure it. Maybe it's a reset, like Neal's talking about. But you can push back me on this argument. But anyways, I'll stop there. I'll leave that. You guys can.
Yeah, if I could jump in, I totally agree with everything you're saying, Bridger, from the start to the finish. I've heard about, for 38 years, I've heard people get on our stage at the New Orleans Investment Conference and talk about the death of the dollar, and it has not happened, and the debt blowing up, and it has not happened. So I have to examine myself when I look at it today and say, if I've just become an old curmudgeon now, and I'm becoming like these people thinking the world's going to hell in a handbasket, or are things really much more serious right now? And I think it's gotten to the point of simple math, and a lot of things have gotten really just insane. If you look at that process I was talking about, where the Fed always lowered interest rates as a result of every recession, and were never able to raise them back to the range that they were before. Then came 2008, and they came up with some crazy crap that you would have gotten. They would have put a tinfoil hat on your head if you would have predicted anything that they did in 2008 beforehand. Between all of the acronym programs, between quantitative easing and the fiscal bailouts of Wall Street, that was crazy. And zero interest rates, the lowest rates in 5,000 years of human history. And then came COVID. Now, that process means that the markets have become addicted again to ever easier money. So when they react to a crisis, they have to inject more of that monetary adrenaline, more of the drug, because the patients developed a tolerance. So they did all this crazy stuff in 2008. With COVID, they did all of that. They did a multiple of that. And instead of doing over 4 to 5 years, they did it over 4 to 5 days. So this next crisis, whatever it is, and as Neal was saying, there's a lot of dominoes out there. This next crisis will force them to do things that will make your head absolutely spin to get the same kind of reaction from the market. So we're in this kind of repeated cycle. My thesis is that with each of these cycles, it becomes more and more evident that currencies are trash, or becoming trash, and becoming ever less valuable, ever more plentiful, and losing credibility with every successive cycle. So whether it's this cycle or the next one or the next one, the end game, in my view, is that currencies, and I agree with you, it's not just the dollar, it's global currencies in general, because all of these developed nations and developing nations have done and are doing the same thing. They're going to lose credibility. The answer is attaching that to something. And the age-old answer to that question has always been gold, and it's easy to do. It's not that hard. You just back your currency to some percentage with gold. And you see Asian banks, you see central banks around the world buying gold hand over fist. They've been the buyers over the last 6 months to a year, as Western investors have been largely absent. What are they preparing for? They're building up gold reserves. So I think that's likely going to be the great reset, is that you attach, you put an anchor on currencies, you restore credibility very quickly by just attaching them to gold in some form or fashion at some level.
Yeah. Let's go around here. I want to hear from Neal and Bridger once more, and we're going to take some questions. But I want to talk a little bit about. I mean, if you want to individually, you can speak on, what kind of add to that. What do you see kind of the end game being? But what I would love to see is for investors from a takeaway. A lot of times you go to things like this, and it's like, okay, everything's going to eventually someday fail. Like, what do we do? Okay, buy gold, whatever. Like, what is an investment strategy? I think buying gold is a very conservative thing to do, and I think it's good. It definitely is insurance. But what are some things that you find really interesting for 2024 to invest in? Let's start with Neal, and then we'll go to Bridger, and then to Brien.
Well, as a multifamily guy, I hate saying this because I always want to offer other options, but this is actually a good time to be buying the kind of real estate that thrives on bridge loans, whether that's multifamily or any other kind of commercial real estate. Everything's on sale. Now, commercial real estate, especially office, is not quite at the level of sale yet, but we're talking about a year. So I'll say in Q3 or Q4, you might want to look at buying office real estate, because if that's something that's, powerful for you, because I think it'll be 40 to 50% off. Today, all multifamily in the United States is at least 30% off. I'm making offers at 37% off of the peak, which is only 19 months ago. Compare that to single family, which has gone up 3% since the hike started, which has been one of the most bizarre things I've ever seen. I projected single family price declines in the teens, in the mid-teens, 10 to 15, 20%, because you've gone from 3% mortgages to almost 7%. So the people's ability to pay has changed. What I didn't anticipate is the lock-in effect, where we have 50 million homes locked in at 4% or below, and nobody wants to move from a home that's at 3% to a home that's at 7%. So nobody's selling. So inventory is ridiculously low. And so you end up with this absolutely stunning, bizarre circumstance where single family home prices are up 3% since the crisis began. Multifamily prices are down 30 to 37% since they began. I would have never imagined that such a divergence could be possible, given both classes are so dependent on interest rates. But it has happened, which means that the classes that are being hit the hardest by the interest rates, that's what you should be buying. So it doesn't need to be multifamily, but anything that was extremely sensitive to interest rates is going to be on sale, I think, until Q3 or Q4 of this year, and then slowly that wave will ebb. And that's really what you should be looking at: assets that are highly dependent on interest rates.
Right. It's amazing when you buy, your buying price is fixed, but you also can refinance and adjust your interest rate later. So that's why
That's
there's
right.
some incredible deals out there now. We're starting to see them for sure. Bridger, what do you think? What are some of the best kind of overall investment opportunities to consider in 2024?
Well, great comments by Brien and Neal. That was spot on. It's so interesting. The realist, like, I didn't predict that either. Who would have thought?
Yeah.
I think that's spot on from Neal. An asset for all, we're all in different kind of alternative assets to the dollar as well. So I run a crypto hedge fund. So I'll talk about crypto for a second. I think crypto is in a very interesting and compelling spot right now. As people know, crypto goes in 4-year cycles. And the last cycle was 2021. It peaked at $69,000. The previous cycle was 2017, peaked about 19,000, right around there.
You're talking about Bitcoin specifically, right? Bitcoin?
Bitcoin,
Okay.
yes.
Okay.
And then it'll fall about 70 to 80%. We've already had that happen in 2022. Right now it's recovered. Bitcoin's around 42,000 right now. And we are approaching the next Bitcoin halving, which is in April. So a halving event in Bitcoin is where it becomes twice as hard to mine a Bitcoin than before. So there's 21 million Bitcoins ever to be produced. Already 19 million have already been mined. And I think 6 million have been lost because people just forgot their keys or whatever, lost whatever. So you have a shrinking supply when there's less supply mined, it strains supply, and typically price goes up. The last 3 cycles it's done this. And we're looking at the 4th right now. So our analysis, last cycle, Bitcoin did a 20x throughout the whole cycle. Ethereum did a 28x. We think this cycle Bitcoin will do about a 5x. Ethereum will do about an 8x. And then altcoins, which are all sorts of coins, can do anywhere from a 20 to 100x, whatever, depending on the coin. But a very interesting cycle right now. So our price target, we think there's going to be a lot of chop for the next few months in Bitcoin. By the end of 24 into 25, we think we're going to be exiting a lot of our, if you follow the cycles, you'll exit your positions probably in July of 2025. August 2025 would be the next peak. Now, all that being said, and the reason I asked Brien about market manipulation is because we just had 11 ETFs open for Bitcoin last week or a week and a half ago, which is significant. And that opens up a whole new slew of potential market manipulation, all sorts of stuff that can happen to an asset like Bitcoin. Right now, Bitcoin is sold off significantly since the ETF is open. I'm generally bullish on Bitcoin and crypto for the next 18 months about. We have a couple rationale around that. We had about 4.5 billion enter the market day one. Crypto Bitcoin trading volume was about 30% of trading volume between the S&P 500 and QQQ. I mean, it was about a third of all trading volume. Did very well. It's sold off a little bit. I mean, we don't know exactly why it's selling off currently because there's a lot of inflows. One thing that we think is there's a lot of people talking bad about crypto. But at the same time, you watch what they do, not what they say. So Jamie Dimon, for example, from JP Morgan, Jamie Dimon has just been crapping on crypto. Crypto's the worst. It's a fake, blah, blah, blah. But JP Morgan was actually the broker for BlackRock's ETF. So you kind of watch what they're doing, not what they're saying. For a long time, Larry Fink's very pro Bitcoin, but a long time he was crapping on Bitcoin, hated Bitcoin. And now he's probably the biggest salesman for crypto on earth right now is Larry Fink talking to on every CNBC show I see him. He's talking about Bitcoin and all the ETFs there. So we think there might be sellers trying to push the market down to accumulate more. But overall, if you look at a long-term scope, we're generally very bullish for crypto. This could be another, the next 18 months, we think is very bullish for cryptocurrency markets. Especially, we like to invest into coins that have utility behind them. Not just coins that just have a dog on them, but coins that actually have utility, that actually do something. There's certain blockchains. One of them managed the supply chain for Walmart. They saved Walmart $250 million one of their quarters just by managing supply chain more efficiently. It's a full blockchain. There's a coin behind that. We think of it like technology almost. There's one blockchain that measures all the electricity used when you do anything online. So for example, when Cristiano Ronaldo posts on Instagram, it costs the world about $150,000 in electricity just because so many people view his post. If that makes any sense. So there are certain blockchains that
get back to playing soccer, damn it.
Yeah.
I know, isn't that wild? So there's blockchains that have like some utility to them. We like projects like that. We think of it like software. This is like the .com bubble where there's actually, yes, there's some crap ones, but there's also underlying software that's actually very usable and sustainable and very great. So we try to get into those positions. I'm generally very bullish on that, especially with all the stuff that Brien and Neal talked about as well for this year.
Thanks, Bridger. Appreciate it.
Can I jump in there?
Please.
I am not a Bitcoin expert, but I love reading about it. I think I'd spent too much time reading about crypto, and I think Bridger is spot on. I think there's very strong tailwinds for crypto, specifically, I think, especially for Bitcoin because of continued acceptance. And the ETFs are not just happening in the US, they're happening in other countries as well. So that it's kind of moving forward on its acceptance curve. So I don't know about the other altcoins because I don't look at them. I think Bitcoin's got strong tailwinds. The catch again is what he's saying, 18 months. A lot of people buy into Bitcoin and then they don't realize that it's a cycle, right? So they don't get out in time, right? With crypto, you've really got to be obsessed about when you get out.
Yeah. I was actually kind of anti-crypto. I did a video about being anti-crypto or thought it was a scam, whatever. And then for me, what changed it for me with crypto was when the Canadian truckers, right? When they froze assets of the Canadian truckers. And even like if I was giving money to a source or something I believed in, and they said, no, you giving the money, you're a terrorist, and we're gonna freeze all your assets. It was crazy. I thought having some liquidity outside of the financial system could be helpful. So obviously gold it's a little hard to transport, but crypto could be transported. There's also many other reasons, and I've come around to, okay, crypto has some definite benefit as well. Brien, I want to hear your thoughts. What do you think? We're gonna get some questions here in a minute, but tell us 2024. I know you're doing all kinds of not just gold and silver, but other sorts of resources, and just talk to us about what you're seeing as a potential investment opportunity for this year.
Yeah, well, I guess you won't be surprised to hear me say gold.
So surprised.
But I always tell people, especially those who are new to the sector, that you can buy gold as insurance, and that's insurance against all the things we've been talking about, this long cycle, this potential reset, et cetera. And the other is investments. So if you look at the macro picture and say that it is uh, bullish for gold, like it is, I believe now, even with gold at near all-time highs, the macro picture argues for much higher gold prices, for gold prices reaching a new, much higher trading level. And when that happens, when you look at it and you see that, then you can leverage gold, and that's where the investing part comes in. Lots of ways to leverage it, futures options. If you are a sophisticated trader, you can buy some ETFs that are 2x performances on gold or mining stocks. You can do mining stocks. Then within mining stocks, there's a wide spectrum from the junior explorers to the more established producers. That's the area that I focus on, mining stocks and gold newsletter. And I tend to focus on the more speculative, hair on fire end of the market in the juniors, which can do very well in a sustained rising price environment for gold. Silver typically offers natural leverage to gold. It's the poor man's gold. And in every sustained bull market in gold, it's outperformed the metal. So I like that. And, what we need to see in the near term, and I think we will, is we need gold to get over $2,100 to really prove and demonstrate an actual breakout, a new breakout to a much higher level. We've hit these general highs around 2070 or so, 3 times, 4 times now. And for this not to be just another false move, we really need to get over $2,100 or so. And I think that will bring in a lot of generalist money into the sector, a lot of trend following Western investors. And that'll take us much higher, I believe.
Yeah, that's great. Thank you for sharing. Real quick, any thoughts on uranium? I know Rick Ruled talks a lot about uranium. Is
Yeah,
there any?
love uranium. Have been loving uranium for many years, and at my conference, it has been a long-running joke that it was everybody's top pick for 10 years, and nothing ever happened. And all of a sudden, which we knew it would happen, it's kind of happened. So we're getting a long-term supply-demand story that's irreversible, irrefutable, irresistible, finally coming to a head. And Kazatomprom's supply issues right now are probably definitely deeper than they're admitting, and probably deeper than much of the mainstream financial media is predicting. So we're having a rising demand, but we're having a very significant supply crunch right now, where utilities are going to have to go into the spot market, which is really thin, and buy new supplies, and that's going to drive the price much higher.
I think
Um,
another area that is very interesting is lithium.
Yeah.
Even though we're now getting LFP batteries which use less lithium, so lithium went up and then it actually came down in price, which makes sense. Anytime the market will drive the price up too far and then it has to adjust. But when I'm looking at the amount of money that governments are investing, including what the US is investing, but China is obviously far ahead of us. The US, 9% of vehicles sold in 2023 were EVs. In China, the number was 33%. 1/3 of all cars sold in China. The US is somewhere in the 16% range, though one of the Nordic countries, I don't remember what it is at 87% of cars sold are EVs. So I'm not going to get into whether EVs are good for the environment or bad for the environment, or if they make sense. The point is we're moving along this path. And even as we move along this path, we're going to need 5x, 6x, 7x lithium. I believe that we have all the lithium that we need, but the money to invest to get that lithium out of the ground, that's very bumpy. And so there's going to be plenty of times in the next 5 years where the price of lithium is going to shoot up.
We saw that just last month, actually. You're probably familiar with the Salton Sea in Southern California. They discovered 3,400 kilotons of lithium, so enough to power over 375 million electric vehicle
But
batteries,
it's
which
going to
is kind
take
of
10 years
10
to
years.
get
Okay,
that first gram of lithium out of that
10
Californian field,
years.
right? 10
Amazing.
years.
Yeah,
That's
and
that
I
is
would
the
be
yeah.
skeptical of any of those kinds of reports because one thing they did not report were the grades and if they were economic, and
Yeah,
Right.
that's key. And I would add to lithium, I would add copper because
copper.
lithium, cobalt, nickel, a lot of the different metals and elements that go into battery metals and that whole story can be engineered around to some degree. Probably lithium's tough to do, but the other metals we've seen them develop technologies that minimize their use. You can't get around copper though. It's
Yes, I agree.
necessary for the motors, and just as important, perhaps more importantly, it's necessary for the grid, which has to be completely revamped to deliver that kind of energy that we're
Mm.
seeing. So copper is a longer term story,
I
but
agree.
it's another
More
one of those
stable than
ones.
lithium.
Yeah, it's
Yeah.
another one that is solid and you can't get away from it.
Yeah. We're getting some questions come in. We're going to take a few questions now. If you have a question, you could specifically, there's a Q&A section. If you stick it in there, we'll be sure to see it, or be more likely to see it, I should say. Somebody's asking about the election cycle, whether it's Republican, Democrat. How do you think that will affect the price of metals?
I think it's irrelevant right now because I'm not too positive on anybody winning the election right now. And it really is a monetary issue that's going to drive the metals. And if Trump wins, which seems a good possibility now, he is a big low interest guy. So I think that could have an effect. But no matter what happens, we're going to have declining interest rates, and I think that's going to be bullish for everything.
Right.
I think Trump has no hesitation in directly and very visibly attacking the Federal Reserve to lower interest rates, where other presidents, I'm actually not aware of any president in history before Trump that attacked a sitting Fed chair.
Yeah.
And I think he will have no hesitation to attack again. The first time they sort of didn't do what he wanted, but there's no guarantee that that'll happen the next time especially if there's a crisis on the way. Trump will be the one that'll be calling and saying, cut interest rates below zero. So especially if a crisis occurs, I think Trump's the one that is likely to drive up the prices of alternatives the most because as far as he's concerned, he's going to tamper with monetary policy regardless. The president has all the power.
Right. Another question, I guess, is for Bridger, is the blockchain. What's the name of the blockchain that saved Walmart 250 million?
But this was back, I think, in 16 or 17, early on. And I believe Walmart acquired the company and now does it internally. In 2020, Walmart was launching or 2022, excuse me, they were launching their own coin. I think they do it internally now. It's a blockchain they internally run. Yeah. And then
Yeah.
Matic, someone asked about Matic. Matic, I think 10x'd in the last month. So I think it's a little overbought right now. That's my personal opinion. We like both Polygon and Matic, though. We do a lot of research on both those. So
Yeah, it's interesting how there's a lot of for that Walmart example, that there's a lot of blockchain. There's a difference. A lot of people don't understand there's a difference between blockchain and crypto. Crypto being more cryptocurrency being more finance related, and blockchain. I emceed an event about a year and a half ago called the Blockchain Real Estate Summit. With Michael Flight and about 300 people in Austin, Texas. And it was just really interesting to see the technology behind it, the blockchain, how that's starting to impact more areas of life and to give more security and do more things in that way as well.
another way to think about it too, it's almost like Apple or like Microsoft has their operating systems and technology, but they have a stock that you can buy. That's one way to think about crypto. Like a lot of these companies have blockchain technology, but you can buy their coin that represents, the company, like buying Microsoft stock that represents the whole company. That's a different way to think about. We do a lot of research. We do more value investing in crypto. That's one way to think about it. So, go ahead.
Yeah,
I was going to add
say,
on just the
go ahead.
election. I think Brien brought up something. He just said if we get out of this election, or if anybody gets elected, I think there is a decent chance. Not a decent, I guess. I don't know what the odds are, but that we might. This is going to be a very interesting political cycle for all. This is for all markets. If Biden wins again, there will be. I think mass protest. If Trump wins, there will be mass protest. And then how do we verify the election wasn't rigged? On both parties, the last two cycles have claimed Russia colluded, Trump claimed the ballots were wrong. So whoever loses this cycle, you're going to have 70 million Americans that think the election was rigged. And I think people will say, you know what, it's not going to happen this time. I think there's a probability, some level of risk that we are going to be in a very interesting spot a year from now trying to decide who the president is. But maybe I'm just too conspiracy theory on that. But I don't
more
know if
Bitcoin.
Wouldn't be surprised.
more
I wouldn't be
gold.
surprised. You know,
Yeah.
so it's just become normal for people to dispute these kinds of things. But generally, and I think Brian would agree to this kind of uncertainty is not necessarily bad for the markets. I mean, the markets sort of march ahead because the markets actually don't want anybody to come down with a hammer and change the income tax rate or get rid of depreciation or do something crazy. And so hung political environments, they get nothing done and business sort of just moves along.
Yeah.
Yeah. Absolutely. So we're getting more questions about crypto and digital currency stuff. If you do have any questions about real estate, about precious metals, or we can talk more about crypto, we can certainly talk about it. We got a few more minutes, a couple more questions here. So what do you think about the U.S. Central bank digital currency in relation to real estate, Bitcoin, and gold? Do you expect this to happen? When do you expect it to happen? Is it just a posturing? I mean, is that actually going to happen?
Honestly,
I'll talk about this for a second. Maybe you guys can add more. But so November 2022, the Fed did a 12-week test of a digital dollar. They did it with the New York Fed, Citigroup, Wells Fargo. For 12 weeks, they completed that test. This is and then the banking crisis happened. This is last March. They then announced the Fed Now protocol that was going to come out. I don't believe it's launched yet. It was supposed to come out in July. And this was supposed to be from the Fed. It was on the Federal Reserve home website to do essentially like large Venmo transactions. We had a lot of people working that at least informed us on the inside. They were going to do $500,000 instant wires, which I believe they might have and might not. And then at the same time, they announced these ETFs that were coming out as well. My business partner, Dan, is on the board of Intel for the last 16 years. Intel was awarded a lot of money from the CHIPS Act that came out in 2022. They're at $54 billion towards the CHIPS Act. There's another $280 billion earmarked for the next round of the CHIPS Act. And they're building these huge mega sites. So Ohio has a 1,000-acre site.
Yeah,
Phoenix
big one.
And I'm sure Neal with real estate, those are hot markets for real estate right now. I'm sure Neal's cleaning up on those markets.
Phoenix has one, Columbus has one. Yeah, big ones.
So Dan, my partner, he's on the board of Intel, and he's like, this is my opinion. This is not Intel. But he goes, they are overbuilding. They're building the fab facilities, which, by the way, are already almost online, but they are building massive data centers, huge. I mean, enormous data centers alongside them. And he goes, and his opinion was the only reason you would do that. I mean, we already have data centers, but that many data centers is if you wanted to house some type of central bank digital currency. If you go to the atlanticcouncil.org, you can see that there are 34 countries currently in research and development of central bank digital currencies. I can share my screen if you want, but this is pretty interesting to look at. I just think it's too juicy not to do, you know? As a central bank, you have China that's already done one. I'll pull this up. Sorry, I'm talking too long here. You guys can comment as well. But I think this is just interesting to look at for this question on central bank digital currency. So they track countries and how much they've done. Hopefully you can see my screen okay. So
I can see it.
Right here, there's 11 countries that have launched central bank digital currencies. There are 21 in pilot programs, China, India being one of them, Russia in pilot programs right now. Development, 33, I said it wrong, 33 countries in development, United States being one of them. They've announced, it's been on the home website of the Federal Reserve for the last 3 years. It's been something about a central bank digital currency. And then research, 46 countries. You see this many countries looking at this and developing. I just think it's, I don't think it's a question of if, it's just a matter of when. It might take 20 or 30 years. Who knows? It might take 100 years, but I think it is inevitable that we're moving this direction. That's my opinion, though. Curious other thoughts.
Yeah, I think it's inevitable that they'll try. I think it's inevitable that it'll be implemented across the world. Governments always seek greater power, and this is the ultimate power. It's also the end of the world as we know it, in my opinion, and something you really needs to keep you up at night. In the U.S., I think there's a faint hope that we can prevent it because of our somewhat, more maverick nature and independent legacy. I've heard that Jerome Powell is against central bank digital currencies and just is kind of being pulled along by the tide as it is right now. But he won't be there forever. And so I think it's something they are going to try. And, everyone needs to just try and, as much as we hate government, try to get involved and lobby and raise a ruckus against this whole idea and make it an important political point going forward, because it is extremely dangerous and it will affect every aspect of your life.
It does seem like, because it's a big brother's, it's kind of a nightmare, right? The government can
Yeah.
have control over every transaction. And, if you buy too much beef or if you drive a gas car, they can start turning off, or you want to buy guns, they'll turn off the things to buy certain things. It's kind of scary and crazy.
Again,
Guys,
look
this
at
is,
Canada. Look at your
yeah.
example.
Yeah, the Canadian truckers, exactly. Guys, this has been amazing. I feel like we could just talk all day, and probably will at some point. Just, and hopefully we'll have each of you guys at the conference we're doing this fall, the Advanced Investing Summit in Los Angeles. But I wanted to just see for each of you how people can get in touch and follow what you're doing, and anything you want to share here. Just maybe take 30 to 60 seconds and just kind of close it out here.
Sure, I'll go first. Multifamilyu.com is a website, always free, no subscription, no upsell, no educational products. We host about 20,000 people. They come and we do webinars on all kinds of things. We're actually doing one on the impact of electric vehicles. We did one on the impact of climate change on real estate last year. We do all kinds of interesting webinars. And of course, we do webinars on various kinds of real estate. So check out multifamilyu.com. I promise you won't be sold anything.
Okay, awesome. Thanks, Neal. Appreciate you. Brien, how can people follow what you're doing and learn about your conference and your newsletter?
Yeah, newsletter is simply goldnewsletter.com. It's the oldest publication around on precious metals investing. And our conference is the New Orleans Investment Conference. That's neworleansconference.com. It is the oldest investment conference in the world today. We're celebrating our 50th anniversary this year. We have a lot of special events. That's in the fall, November 20th to the 23rd, the week before Thanksgiving. So won't conflict in any way. But that's neworleansconference.com. Check out our speaker roster, and I'm sure you'll like what you see.
I've been a couple times. It's a great event. Highly recommend it. You should check it out. Bridger, how can people follow what you're doing? I want you to talk a little bit about launching a fund. I know you've helped thousands of people launch their own investment fund, and talk a little bit about that as well.
Yeah, I'll drop a few things in here. A lot of people are asking about dollars, gold, and Bitcoin. So me and my dad just wrote a book called Dollars, Gold, and Bitcoin. Talks about BRICS nations, kind of economic stuff. That's that. And then on the fund side of things, so my brother's an investment funds attorney. I've ran four funds now. My dad ran his multi-deca-billion-dollar funds. And so we've started to build, things to help other people launch funds. So we launched a small course, which grew into a bigger course, which now is a big conference and other stuff. We've had about 73,000 people go through one of our courses on funds, fund management, how to build one, how to start one, how to scale one. We've launched 240 funds in the last 2 years. So about 2 funds a week launch out of our group, which is pretty cool. So we have a free course, completely free course on funds. If you guys want to hop in, it's like 20 plus videos, all about funds, how to build them at fundlaunch.com. I just dropped it in. And then also we throw some fun events. I know I actually want to come to Brian's event. That sounds awesome. We're throwing an event in about 3 months. Neal is speaking at our event, all around capital raising, finding people. So it's called Fund Launch Live, all dedicated to emerging fund managers, people that want to get in the space of money management. Last year we had 2,000 people live in Miami. This year we're in Orlando, expecting about 2,500 this year. It should be pretty fun. So, but then a ton of just free gifts on there at fundlaunch.com. Just go. There's tons of free assets and resources and stuff if you want to get in the space of launching a fund. So, and also Bronson, just thanks for having me on. This is phenomenal. You do such a great job moderating, asking good questions. And anyways, and Neal and Brian, it's awesome being on with you guys. Thank you.
Thanks, man. This is great. A lot of fun.
Terrific.
Really, really great conversation. Always enjoy these panels. Our next opportunity, we do these every month. So next month, we're having the next Bronson Equity monthly event. It's the 2024 Real Estate Risks and Opportunities. We got some really big name people. I can't announce any of them yet, but if you thought this month was good, I mean, wait until next month. The speakers we get there. No, I'm totally joking. I'm giving our speakers a bad time here. No, I'm so grateful to connect with each of you. And I dropped my book link in the panel. I just released a book called Fire Yourself, Replace Your Working Income with Passive Income in 3 years or less. Also, each of these guys, I know Bridger has his investments. We have our investment club. Neal has an investment club. Brian has his newsletter and his event, which is awesome. awesome. So support them. Just so appreciate you guys. The best investment you can make is in your own education. So whether you're watching this live or watching it on a replay, well done for doing this. And thank you for our panelists for being here, for the attendees. We'll look forward to seeing you guys hopefully again real soon, and wishing you all the best in 2024. May you make lots of money and protect the investments that you have.
Thank you, Bronson. Thanks, everyone.
Thanks,
Thank you,
guys.
Bronson.
Thanks so
Thanks,
much,
guys.
everybody. Thanks, guys.
A lot of fun.